So let me go ahead and start recording this real quick. Okay, awesome. And let me see here. Add my note taker to here as well. All right. All right, awesome. So I'm gonna call on someone at random that was in their first 30 days. Let's see. Someone's about to get put on the spot. All right. Keon, is that how you pronounce it? Keon, K-I, he's on a call.
No,
Damn. Kihan? Nah, he's busy.
it's Kian.
Kian, brother, can you explain to me an IUL? Can you pretty much give us your best shot in explaining an IUL to us?
Yeah, so in my last agency, I couldn't figure it out. I had like 3 meetings about it, like trying to figure it out. I couldn't really, but I'll give you my best shot.
Yeah,
I do
that's all
know
I want.
that I do know that it will like capture it at like 6 to 14%. It will capture it on the upside, but like you won't lose any money from 3 to 0%. I do know that. Like that's like the littlest bit I know. Huh,
All right, so I'm gonna dumb this down for everyone. Actually that
perfect.
does encapsulate a small portion of it, right? But when you're explaining these products to a client, basically you're to go over three things, and I tell them this exactly. It's in my script. I say, hey Leslie, hey Jen, this is as long as you understand these three components of the policy, you're gonna understand the entire IUL. It doesn't get more complicated than these three things. So if you have any questions while I'm going over these, just let me know. But again, as long as these three things make sense, there's nothing really more to understand about the product. You're going to be a master of the IUL. I tell them that. Then I go over the death benefit, the living benefits, and the cash value accumulation. Before I go into those three things with them, immediately when I open up the call, I ask them, I say, hey, Aaron, I'm getting back to you about the IUL information you were looking into here. Remember doing that? Yes, man. Awesome. Now, when you were first looking into this, what actually was your primary goal? Like, what were you hoping to achieve using this policy? I give them a chance to, kind of tell me what they were thinking, even requesting this info, because no one held them at gunpoint when they, fucking twiddled their thumbs and requested their information. So I know they had some type of emotional connection. They wanted this product, they wanted something out of it, and it had some type of emotional tie, and they voluntarily filled out their information on a form. So I asked him, hey, so what were you hoping to achieve using this policy? If they give me a bland response, I'm always going to dig more into it. For example, if they say, yeah, something about like retirement. Yeah, awesome. So, Kian, like, I guess, like, what made you think that, maybe what you're currently working with your retirement maybe wasn't good enough? Like, did you think that you might need something supplemental? Like, what does that kind of look like for you? Then they're like, oh, well, yeah, I had this old 401k. I lost my job a few years ago, and I just haven't really got anything else started. And then they actually start opening up a little bit. So always make sure that immediately when you get on the phone call with them, you're just breaking down that wall slowly. Because as they're telling you their emotions and as they're telling you what they're thinking about why they want this product, that barrier between you and the client, between a salesperson and a potential client, that's going to get broken down into someone just trying to help somebody else out. So immediately getting into what their goals are, making them kind of explain it with a little bit of depth. Now, okay, awesome. Now, Aaron, your goal, you said you wanted to build some retirement income. You wanted to have maybe something tax free as well. That's actually awesome, man. I can definitely see what we could do for you. Now, on a scale of 1 to 10, before I jump into it, how much would you rank your knowledge of how an IUL works already? Scale of 1 to 10. It doesn't matter if they tell me a 10 or a 0. I'm going to explain it the same way. Be like, okay, awesome, man. So I'm going to go over this. If they tell me it's an 8, I'll be like, okay, no, we're just give you a quick recap of how it works. They tell me it's a 0. Listen, man, I think that's the best starting point there is. Would you agree? Yes. Okay, awesome. They give a little giggle and I get into it again. Three components. Break it down really simply. The death benefit, living benefits, cash value. So, Alexis, that death benefit, that's going to be a permanent life insurance policy attached, permanent life insurance attached to the policy. That's going to pay out to your family one day. I mean, we all have a due date, so that will pay out to them. Now, let me ask you really quickly, do you currently have any permanent life insurance? No, okay, awesome. So this will actually provide you value long term, making sure you have a permanent death benefit paying out tax free to the family one day. That's going to protect you whether you're working, whether you're employed with this job or that job. When you're retired, this is going to be there for your family no matter what. Next, the living benefits. Have you ever heard of those before? Before I get into those, have you heard of them? No. Okay, so this is going to be a really significant portion of the policy now. God forbid you were to get critically, chronically, or terminally ill, even critically injured now, God forbid, you can actually access that death benefit I mentioned while you're alive and use that to cover the hospital expenses, the living expenses, really anything you might need it for. God forbid you were too sick or injured to work. Now, Aaron, I mean, do you currently have a plan, a policy in place that could actually replace your income immediately if you were to get sick or injured and can't work? I let the man try to shut up after I ask him that because I want them to actually verbally tell me they don't have that in place. So I shut up for a second until they talk. Like they're like most of the time, no, I guess I don't. All right, man. I mean, like, God forbid something like that happened. Would you have to kind of dig into the savings accounts, the retirement accounts, take the taxes, the fees on whatever those would be? Like, for example, the 401k. Yeah, I guess I would have to do that. Okay, man. Well, what this will do for you, and again, like I don't like to just build so much value on a specific product and like them buying a product. I like building the value on the solution because that's what they want. At the end of the day, someone in construction, they don't just want, the they don't want to go buy what is a fucking a drill. They're not super stoked about a drill, but they need those screws getting into whatever wood. They need some shit secure. They need the foundation secure. So they need a damn good drill to do that. So you're selling them the solution at the end of the day. You're not selling the product to get them there. They don't care about the product. They don't want life insurance. They just want risk mitigation for their family. They want to make sure they're protected. They want the peace of mind that comes with the product. Let me plug my laptop in so it doesn't die. Now, 1 second. All right. But like I'm saying, you're selling them the solution. So, God forbid you were to get sick or injured, do you currently have anything that could replace your income? If you weren't able to work, let them answer no. Okay, well, what this will do for you and the family then is make sure that A, we're protecting your income. We're going to make sure that your family still has food on the table. If you were too sick to work, we're going to make sure your wife doesn't have to go get a second or third job. We're going to make sure you guys don't lose the house. And we're also going to protect your other retirement accounts, pretty much just making sure that, again, if you're not working and you need extra income, we don't have to pay heavy taxes and fees and penalties on your retirement accounts or drain the savings accounts. Because at the end of the day, those accounts are for your retirement. We want to keep them as that. So we're going to have this emergency money. You can access 30 to 90% of your death benefit while you're alive for a critical, chronic, terminal illness, critical injury. So think a heart attack, stroke, cancer, bad car crash. God forbid, now you have access to that money immediately, protecting your income, protecting your other retirement accounts. Does that make sense? Perfect. So I go, that's the life insurance portion of the policy. Now, here's kind of the fun part is the cash value. Now that cash value, and by the way, guys, depending on what their goal was, when you first ask them that, is like where you're gonna kind of put more emphasis on the policy. Because if their goal was just to get permanent life insurance, like, yeah, I think I can just protect, I just want to make sure my family's good when I die. They're not really like, so much concerned about the cash value. They're probably more focused on the death benefits and living benefits. So that's what you're going to put more emphasis on. If they tell you at the beginning, yeah, I want to build something for retirement, logically, you're going to put more emphasis on the cash value, right? Like that's why I asked them their goal and I want them to elaborate on it quickly. That way I know what to tailor my entire pitch towards. Because again, sales is all about the psychology behind it. You're just trying to evoke emotion to get them to buy something. Sometimes it's about evoking the emotion to get them to see a problem they didn't even know they have. I had a guy today tell me that he didn't have any problems and he was just kind of pushing off the IUL appointment over and over and over again. And I'm like, hey man, like 15 minutes, I'm just gonna go over like how the IUL can help solve some problems you might not even know you have. He's like, great thing about my life is I don't have any problems. I said, okay, let me ask you a quick question then. Do you have any permanent life insurance? No. Okay, so God forbid something happened to you. The daughter you said, you mentioned, what would you do to pay for the funeral? Okay, nothing. Okay, perfect. Now the living benefits, the other a portion of the policy. Do you have anything to replace your income if you were to get sick and injured, can't work? No. Okay, that's problem number two. Now, do you have any building for yourself tax free for retirement that you can't lose? No. There's problem number three. He got pissed on me and said, "You lost my business," and hung up. I was kind of being rude about it, but like I've been chasing this guy around for weeks, whatever. But the point is like people don't know they have these problems. It's your job to get them to see them, and that's by evoking emotion. And don't be a dick like I was. But again, the third component when you're getting into the cash value, the simplest way to explain it, and Kian kind of touched on this a little bit, is like, all right, so this is going to be a tax-free savings account attached to your policy. That's as simple as it gets. And you ask them, like, and when you put your money away into a Chase savings account, are you worried about losing it? No. Same way with this policy. We can't lose any of the accumulated value in the market. So it's going to operate like a savings account. But the cool thing is, unlike your traditional savings account, which captures maybe 2% interest, 4% on a high yield savings account, this is going to be actually growing with the market. So we're able to have uncapped interest based off the performance of the market and have a 0% floor on the downside, ensuring we don't have any losses. So it's going to grow for you tax free. We can access it tax free. And then with this policy, it's actually going to become liquid for you after 12 months. That way you could even, if you needed to, you could start using it. That way your money's not locked up, unlike maybe the 401k they mentioned, and kind of give it a quick comparison of like you meant like they might have mentioned they have a 401k or a pension or something. It's like, hey, your money's not going to be locked up. So it's liquid after 12 months. It's going to grow for you tax free, access it tax free. I honestly, I don't really give them so much of like a percentage. I might say like, yeah, like, based off the past 20-year average, based off the way our policies are currently set up, we can average anywhere from around 10 to 14%. I usually say, hey, we can probably net, like usually we're about netting 10% off these policies year to year. Right. So that's as simple as I make it for the client. So it's like I just go over those three things. I build value on each component because then I'm going to get into qualifying questions of like health, criminal background, driving background, see if they qualify for me to even write an application for them before I even talk numbers. Because let's say they don't qualify. You know what other product has those same three benefits? Whole life. What will they probably qualify for? Whole life. So it's like you're setting yourself up for a really easy pivot, right? Because even if they don't qualify for the IUL, you didn't drag yourself into a hole. They have permanent death benefits with whole life. They have living benefits with the whole life. They even have cash value accumulation with the whole life. It's just going to be at a fixed interest rate at like 4 or 5%. That's still not the worst case scenario. Nicholas, I did see your hand up, brother. What was up?
No, just curious. So when you're going over the benefits, a lot of the clients you probably talk to have other things like you were mentioning, like 401k, TSP, whatever. What is something that we can harp on that is advantageous, like the tax-free part, right? Like, so for a 401k and you draw early before you're 65 or whatever it is, you're getting that early withdrawal, that tax. Like, what is something I can really harp on to say, yeah, you have a 401k, yeah, you have a TSP, whatever. But this is where this IUL is going to help you more than that. Like that's one thing I run into that I can't answer sometimes.
A big thing that I had misunderstood when I first started was I was always trying to dog on whatever else they had to build up my product. The same way, like if you're talking to someone with another insurance policy with a different company and I'm trying to help them replace it or see where, show them that I can help them out. The last thing I want to do is dog on the other company. So, for example, if they have an Aflac policy that I know I could beat the rates on, I'll say, hey, it's actually incredible that you were proactive enough to get that policy in place, especially with a good company like Aflac, right? So my job is not to sell you anything today. It's just to kind of review that policy with you and ensure that you are in the best position long term and that you're not being overcharged. So like I want to build them up a little bit, make them feel good. I don't want to make them feel stupid, Like I don't want to be like, oh, like the policy you have right now sucks, and here's why. It's like that it puts you in a position where now it's like very salesy because you're dogging on what they have. So how I go about that situation, Nicholas, is I'll just make quick comparisons. I'll tell them like, hey, by no means is this meant to completely replace everything you have, but this is definitely a way to actually add more financial security and long-term protection because, again, the money we put into this, it grows with uncapped interest and we can't lose it. It grows for you tax-free and it's liquid after 12 months. So when you run into financial situations down the road, we can leave those 401ks alone because Nick, and I'll tell them this like, hey, Nicholas, like you're aware, right? Like you take any money to that 401k before you're 59 and a half, you're getting about 50 cents to the dollar after you pay the capital gains tax, income tax, and then 10% federal penalties. Awesome. So the 401k is great because I'm sure they're matching you. They're probably throwing a little bit extra there, maybe 3 to 5%. I love free money. I've never been one to turn down free money. But where this is going to help you out long term, Nicholas, is you run into any type of financial situation where you need quick access to money. Instead of going to the bank and asking for a high interest loan, we can actually just use the cash value you've accumulated in the policy with no fees, and we can even do that tax free, right? So this is going to again, this is going to protect our retirement accounts. This is going to make sure you have access to money. It's liquid, right? So I just draw comparisons and I make sure that, hey, that has its purpose. This has its purpose. And here's where this is going to help you when this won't. Does that
Okay,
make sense?
thank you. Yeah. That helps a
100%.
lot. Thank you.
That's a great question, though, bro. I appreciate the good questions. What's up, Jackson?
What's going on? It's my first day, but looking at the
Welcome,
training,
brother.
yeah, hey, appreciate being here. But yeah, so I was watching the training videos on IULs, and I worked with like whole life a lot with my previous company. But I just want to know more about how the MEC works, so like the modified endowment contract, where it turns from like life insurance policy into like an investment. Like, how does that kind of work, and kind of what's the main difference between like whole life and then obviously that with that aspect?
So I'm trying to think if I should just jump into like some illustrations here or or not, because
Yes,
that's
yes,
a good question.
please.
Yeah, okay. Awesome. So let me just pull up an illustration. I'll actually answer that question for you here. Pretty good. I'll say this, that
You're on it, right?
the biggest difference
You're
between hold up. The biggest difference between whole life and IUL is just going to be the cash value side of things, the cash value and the cost of insurance. So the whole life, it's a level cost of insurance. With an IUL, the cost of insurance will slightly go up as they age, right? Since it's a universal life policy. But the biggest thing, right, is the cash value accumulation, the way it accumulates. Whole life grows at like a 4 or 5% fixed rate. IUL is going to be based off market growth. So it's going to be indexed, going to be attached to SPX 500, the US Paceset or BlackRock, whatever the index is, and based off the performance of that. Some of them have caps, some of them don't have caps, some of them have higher participation rates than others, depending on the company. The point is that it grows with the market and it has a 0% floor. With a whole life, it's going to be more like a CD account, like a fixed rate. It's growing no matter what. Every year, 4 or 5%. It's growing this much. It's predictable. I could look at an illustration. I can tell you exactly how much you're going to have in 25 years. With the IUL, it's going to be obviously, I can't tell you what the market's going to do next year, 10 years, 5 years down the road. So that's the difference between whole life and the IUL. Now, when the MEC premium comes into play, this is just a rule by the IRS, basically stating that we can't put in more than a certain amount of money into a policy with a certain amount of death benefit attached to it. Because then we're going to basically just lose the tax advantages with the life insurance side of things, the tax-free growth, and then it's going to be taxed like a 401k with early withdrawal penalties and stuff like that. That's essentially like does that simplify it all? Because it's not too complicated of a thing. No client is going to be like, show me the exact tax code and all the rules. Read it word for word for me. Like they don't really need to know everything about that. If you could explain it like, hey, that MEC premium, that's just the maximum we can put in on a yearly basis without it losing tax advantages. They'll be like, okay. And then that's end of conversation with them. All right, but I will pull up an illustration here, but let me answer Carmela's question. What's up, Carmela?
Want to know, is there main qualifications to look out for to where we kind of like switch to whole life knowing that they won't qualify? Like, at what point do you switch over the product?
100%. So after I go over those three benefits with the client, I explain to them, okay, awesome. Do you have any questions about the death benefit, the living benefits, the cash value? No? Okay, perfect. And then I'll ask them, okay, perfect. So these policies are obviously, they're awesome. They have a lot of benefit. Unfortunately, not everyone qualifies for them. So I want to ask you a couple questions here just to make sure we can continue looking at the IUL, or if we have to look at something with very similar benefits that operates essentially the same. So I kind of like preface them like, hey, like even if we don't qualify for this, we'll look at something very similar. So that's why I don't talk any numbers with them until I know about qualification. Carmela, if you can just ask them these three questions, you can get a good idea about their qualification status. So, Carmela, like I said, I'm asking you a few questions here to determine if we continue looking at the IUL or if we have to look at anything else that kind of operates on the same type of level. First and foremost, do you take any prescriptions or medications on a daily basis? Yes. Okay, perfect. How many do you take? I don't know, you take four. Okay, and then with those four medications, I guess what are you taking them for? Is like diabetes, high blood pressure? What are you using those medications for? They'll tell you what it is. Here's the thing, is term and IUL have very similar underwriting. You can essentially go to like the insurance toolkits, type in those health conditions or the medications they're taking. And like let's say for example, actually I'll show you this really quickly because this is a really easy way to determine if they're even going to qualify for the IUL. That way you're not wasting any time or building too much value on a product that you don't qualify for. So you're going to go to like, let's say insurance toolkits. If you don't use insurance toolkits, that's fine. You can use something else. I just like this because it works good for me. You can do the term, even the simplified issue IUL side now they have. So let's say I look at something like for 50,000. I don't really care about the number. I'm just more so looking at the medications. If they're taking, I don't know, like carvedilol, I'll be like, all right, I'm put that in here. It's maybe they're using it for high blood pressure, or they've been taking it for 5 years. This person's whatever, 54 years old, doesn't really matter. Awesome. Get quote. Perfect. Still shows up for both. That means they could still get approved for those, right? If they had a heart attack fucking 2 years ago, let's put that in here. Heart attack occurred 2023, 2 years ago. Awesome. Get quote. They're not going to get approved. If ever a heart attack, they're not going to get approved. Right? So I would use something like insurance toolkits to save yourself some time. So, as you're running through the medications, you're putting them in here, and then you're just gonna essentially, if you need to pivot to whole life, it's like, okay, so based off what you told me, we're gonna look at a product that works very similar to the IUL. That way, you still have those living benefits, the death benefit, like I mentioned, and we're even gonna have some cash value accumulating for you. The only difference is it's gonna be more of a fixed interest rate, about 4 or 5%. That way, you have some guaranteed money growing for you. We can always maybe look at the IUL in the future, but for now, I definitely want to make sure we can take a look at this for yourself because like based off what you told me, we can add a lot of value because you don't have anything that could replace your income if you got sick. So I want to make sure we have those living benefits in place for you. Then you don't have any permanent life insurance, and obviously everyone passes away, Carmela. So permanent life insurance is something that we're going to need. So we could definitely take a look at how to take care of that today for you, and then it's just an easy pivot. But yeah, you definitely need to go over their health. So if all the health questions are good, they're perfectly good, no medications, awesome. Now, second question, have you had any DUIs or felonies in the past 5 or 10 years? If they've had a DUI in the past 5 years, that's a decline. A felony in the past 10 years, that's a decline. If they had a DUI 7 years ago, they're good. Anything in the past 5 years for a DUI, not good. Anything felony past 10 years won't get approved. And then the last question you ask them is, okay, and then do you currently have an active driver's license? Because if their driver's license is suspended, I think with America they might be able to get approved, maybe. But I know for a fact National Life Group will not approve anyone with a suspended driver's license. If they've just never had a driver's license before, maybe they could get it. But like if it's because of any traffic violations, or I had someone. Like when I first started the business, it was like a $500 a month NLGIUL. I was so stoked about it. My biggest policy today. It came back from underwriting as the guy didn't pay his child support. and his license was suspended because of that, and never got him on the books. So like the little shit like that can actually make sure they don't get approved, which sucks, but that's why you need to ask those three questions. Yeah, the integrity quote tool is Savannah. Yes, that definitely works. It's free. I'm a stubborn bastard, and if it's just working for me like this, I'm just gonna keep using it. But yes, you could definitely use the integrity quote tool. I can't necessarily tell you how to use it because I've never used it, but it works the same way.
Yeah, it's super simple and user friendly. It's just
100%.
straight from like the quotes. But I did have a question if you have a second.
Yeah, yeah,
Um,
absolutely.
you were talking about how you go over the benefits of the IUL first, and then you ask the qualifying question because you can always just pivot to whole life. So if you've hyped up the IUL so much, like, oh, it has this huge cash value, and they're really stoked about it, how do you pivot to whole life without losing that impulse on the client?
That's the thing is I don't hype it up too much. Like everything I went over with you guys, I say exactly to the clients. Okay, so it grows for you. I don't tell them like a necessarily a growth rate. I just say it grows with the market. There's no cap on the upside. It grows for you tax free. You can access it tax free, and it's liquid after 12 months. That's as simple as I break it down. Like again, like what I said at the beginning of the call for everyone, Savannah, was like my goal today is just like to dumb down the policy. So when you can simplify it to the client, like very simply, it's just going to make sure they don't have any crazy questions or concerns. Because at the end of the day, it is a simple policy. It might seem like confusing to like especially new people or to clients just kind of learning about it, but like you say, man, you've sold a lot of IULs, so you've been able to explain it clearly to clients before. I guess like a good question for you is like when you are explaining it, maybe when you first started, were you ever over explaining the IUL? Maybe you did get a lot of those I want to think about it.
Easily, kiss versus kill is something I learned very quickly with IULs because you give them too much information, um, then they're just like, I got to think about it, or I need to talk to somebody about this because it seems like a bigger ish like deal than it is. And then I realized like how to dumb it down.
So like us being in the business for a little while, my
Mhm.
goal is to have everyone learn from my mistakes. So a mistake I made was I was so passionate about the stupid product that I thought everyone was else wanted to nerd out about it with me, and I want to think about it, and a whole bunch of people are like, oh dude, that's sick. I want to put so much money in there, and then it just doesn't make sense for them because I didn't actually root it in reality. So if you could just simplify it, there's not going to be all these other crazy concerns they have because you're not making it rocket science. Say, all right, there's three components, and I tell them these three components, as long as you understand them, the whole policy is going to be simplified. There's nothing more to know about it. Those three benefits are the same basically with whole life. So if they don't qualify, then I'm going to pivot over to whole life, start building value on a whole life policy. If they do qualify for the IUL after all my qualifying questions, then I'll start kind of digging more into it. I'll start going over um essentially like actual numbers with them, right? And that's where I'll start building value because everything with life insurance is going to be a value sandwich. By what I mean by that is you want to provide them value first, get their emotions spiked, talk about numbers, so price, and then back to value. So you don't want to end your pitch off with price because that's just leaving them off with, oh, that's how much I got to pay for it. But if you could do a value sandwich, value, price, value, that's going to help the client actually see how it's going to be worth it to put X amount of money into it. Right. So I'm gonna, Jackson, I'll answer your question real quick, and then I'm gonna actually pull up an illustration to show you how I would go about it with the client.
Yeah, so like I said, I'm very new. But I was seeing like the train's like more flexible. You can structure it, obviously, for if you want more death benefits, you less cash value, more death benefit or less death benefit, more cash value. I was just wondering how does that kind of work? Do we structure it personally, or does like the carriers do that?
Yeah. So now I'll show you that because I think that'll answer your question here if I just show you. All
Awesome.
right. So everyone can see my screen, right? Pretty sure. Yeah. All right. Thumbs up. Thank you. Thank you, Nicholas. Appreciate that. All right. You're gonna go to Flex Life really quickly though. If you have National Life Group, I use them a lot. With National Life Group, any of these NL policies, don't worry about. That's only for New York residents. So just do the Flex Life. That's really all you got to worry about. Their term, LSW term, don't do the NL. If it says NL, you're not in New York, resident, if you're not selling to a New York resident, do not do the NL policy. It's just going to come back as you have to rewrite the whole policy again. So Flex Life, I'm assuming we're talking to someone that actually is concerned about the cash value accumulation. That's what they want. They're looking for another retirement policy they can use for tax-free retirement income. That's the type of policies I like to specialize in. Tax-free retirement income. So let's say we're talking to someone that is, I don't know, 40 years old. I tell them after we go over the qualification, I go over I go over the three components. I talk about the qualification. I make sure I can continue building value on this product if I can. Awesome. Now, Megan, how we usually go about these policies, we're going to do about 5 to 10 times your age away into the policy on a monthly basis. So for you being 40 years young in this situation, we're going to look at about maybe $200 to $400 a month to put away. Now, you know your budget a whole lot better than me. Now, for you, right, I'll go over how they're flexible here in a minute for you, Megan, but on a planned basis, I guess what would kind of be the most comfortable number to get started off with between that $200 to $400 range? Now, I'm giving them options between two to 400. I'm asking them directly, for you, what would be the most comfortable between the 2 to 400? Now it's like even $200 a month, it's still pretty good. So $200 to $400 a month because it's 5 to 10 times your age. If they're 50, I'm going to look at 250 to 500. If they're 60 years old and they can fund it, I'll get into that, I guess, the age, a little bit older people, but anyone that's 60, it's like, hey, if you could do, at least $300 to $600 a month, we'll be good. If they're 20, you can do $100 to $200 a month, you're good. So we're looking at $200 to $400 a month for this 40-year-old. Let's say they're like, I don't know, they're like, hey, you know what? I'm not too sure. I'm like, how about this? Let's just see what it looks like somewhere in the middle at like 300, and then I'll go over exactly like what your minimums and your maximums will be. So, what I like to do with everybody now is like, been getting on Google Meets with people. I'm giving y'all the sauce right now because I didn't just start doing this till recently, but it's drastically helped like with rebuttals and understanding of the policy. So let me go to Google Meet and I'll show you like where you guys can do this as well. You're going to be on the phone with them. Doesn't matter if they have an iPhone, does not matter. So as I pull up the illustration, I say, okay, awesome. And then I'm going to send you over an email here, Jackson. That way you could actually take a look at my screen with me and I'll show you exactly how we're going to structure the policy. That way I could show you what the numbers look like. I'm more of a visual person myself, man. So I'm going to show you what this looks like because I know I would appreciate it if I was on that side as well. So go to the Google Meet, start a new meeting, start an instant meeting, grab whatever their email was. It's going to be on the lead most of the time. See if this loads. Add others. It's going to type the email in. It's going to send them a Google Meet invite link. That way, now you can just share your screen with them and show them exactly what you're looking at. So whoever it is, you're going to add their email. Boom, send the email. And now we're going to be on a Google Meet on your computer now. So on the phone, awesome. Let me know when you're in there. I'll hang up on the phone as soon as I see you in there. Awesome, you're in there. Perfect. Let's talk on here now. Now I'm going to share my screen with them and I'll show them exactly like this. Okay, so Jackson, you can see right here, man, this says minimum death benefit, maximum cash value. The reason I'm clicking this is because I guess I do like to mention this earlier out in the conversation. I should have brought this up, but I tell them like after those three benefits or the three components of the policy, your money goes into two different places. The cost of the life insurance, which includes the living benefits, the death benefits, there's a cost to that. And then everything else goes towards that cash value. Now, you mentioned to me you wanted to use this more of like a tax-free retirement savings vehicle. Now, we could definitely do that. So we're going to minimize that cost of life insurance as much as the IRS will let us. That way we can overfund that cash value account and treat this like that tax-free savings vehicle, right? And I'll tell them, I'll show you how to do that here in a few. And then I'll go into qualifying all that. But now I'm actually showing them this. Hey, remember I brought up their money goes into two different places? Like I mentioned, we're going to minimize the death benefit because the smaller the death benefit, the smaller the cost of life insurance. The more death benefit, higher cost. So we're going to minimize it. That way you can maximize your cash value. I like to do increasing death benefits because I'll show you how it's going to minimize their cost of insurance immediately. That way we can actually have more access to their funds quicker. Average age of retirement is about 67. So I have it change into a level death benefit at age 68. I'll explain that in just a second here. That's not too important at the moment. Like understanding it, just pretty much I don't want to confuse a lot of the new guys. I'm just going to kind of blow over that for the moment. Death benefit option increasing into a level death benefit. That's essentially the takeaway. Increasing while they're funding it, level while we're looking to withdraw it in the future as a retirement source. Pretty simple. So increasing while they're funding it, turn into a level death benefit at age 68 because we're going to put down here to specify the amount we're putting in from year 1 until age 67. So they're going to be paying it until they're age 67. If this person was 40, that's 27 years. So let's say we're looking at $300 a month. That's exactly how it's set it up, just like that. Look at a quick view. Now I show them. Okay, so there's 3 numbers I want you to look at here. I don't have them focused on every single year. It's a lot of numbers. I go here. It's only 3 numbers I want you to focus on. This initial face amount, this is how much death benefit you're going to have attached to your policy day 1. So God forbid something happened to you the day after you made your first payment. This is how much can get paid out to the beneficiary tax-free. God forbid you slip and fell and got into a bad accident or got sick. You can access 30 to 90% of this initial face amount immediately. Then I go over this minimum premium. I like to go over the death benefit protection premium. I'll tell you the difference between these two. This minimum premium is essentially like their actual cost of life insurance. This death benefit protection premium, that's the minimum they have to put in to the policy to guarantee it won't lapse on them for a certain amount of time. There's no cost to it. Death benefit protection premium. I'll read it out to you right here, the exact definition. This rider ensures that the policy will not lapse during this period. The policy will not lapse even if the net cash surrender value is less than 0. That means even if their cash value is negative, they're good. So the period, let's say this person's 40, right? If they get issued this policy at age 40 and they're making those payments, that death benefit protection premium, the minimum guaranteed premium, even if their cash value is negative, this policy cannot lapse for 20 years, no matter what. So I go over those 3 numbers. I go over this, the MGP, the initial face amount, and the maximum premium, the MEC premium. So this MEC premium, that's going to be the maximum they can put in, like on a yearly basis. There is other exceptions, but again, I don't want to complicate it for them. So I'm not going to be going into like guideline single premiums. There's no need to do that. Almost no one has like the means to really make that work. So just go over these 3 numbers. Initial face amount, MGP, MEC premium. With the MEC premium, I tell them, okay, perfect. So that's about $4,400. If we're planning on putting in $3,600, you could basically put an extra $800 a month, $800 a year away into the policy. So at the end of the year, you can get your taxes back, or you get a bonus at work. You run a little bit of money. You can put some more money away into here. That way, you can have more money be growing for you. Obviously, the more you put into it, the more you'll get out of it long term. Awesome. Now, with these 3 numbers, I don't really start going into like, here's how much money you're going to have at age 67, because this is just an illustration based off of 6.45%. Like, this is not how much money they're going to have based, like, no, like this is just an illustration. This is not real. This is based off of a 6.5% assumed interest rate year to year. So I'll tell them, hey, like this is a more conservative illustration. We've actually been able to average a lot higher numbers than 6.5%, but it's always better to under promise and over deliver. So this is a very conservative illustration, but even though it's a conservative illustration, this is still a fantastic policy. Because let's say by the time we're age 68 and looking to retire now, we're done, we're going to have over a $300,000 permanent death benefit. We're going to have about $250,000 saved up to actually access tax-free for yourself. And if down the line you wanted to use that as like a full-time income, guaranteed lifetime income, I could show you how to do that as well. Right? So after I go over that with the client, really simple. Awesome. Now, um, as long as you can make this $557 a year payment, which averages out to be, I don't know, it's like a little less than 50 bucks a month. It's like 40 something dollars. It's $46 a month. You can basically put in anywhere from $46 a month to about $360 a month. So for yourself, I mean, would you be able to at least do that like $46 a month? Awesome. That's all you would really need to put into the policy monthly to make sure it doesn't lapse. Everything else is just going to go towards this cash value account. So it's up to you at the end of the day how much you want to fund it with monthly. We're going to be planning on 300 because that's about between 5 to 10 times your age. So this is an awesome plan premium. But just so you know, when Christmas is around the corner, when the transmission on your truck blows, when your fridge breaks down, when the kids are begging to go to summer camp, whatever that might be, you're not strapped for 300. No one's going to force you to put 300 bucks a month away. You have a lot of flexibility because we all understand how finances are going to be up and down throughout the year. Situations are going to come up. I understand that. Now, with this policy, we're going to have a lot of flexibility on the upside and the downside. That way, this is going to be able to work with you throughout the rest of your life, depending on where you're at financially. This is going to be able to be that same policy for you. And again, as long as even if you're just putting the 46 bucks a month, 557 a year, God forbid you were to get sick, injured, pass away, that death benefit or the living benefits are going to be able to pay out to you and your family. And especially if you built the value initially of like, do you have any permanent life insurance? Do you have a plan or a policy that could replace your income? If you went over that and you actually like kind of evoke some emotion, then it's like, even if you just put that $46 a month away, that $70.8 thousand of life insurance, that's gonna be accessible for you. If you get sick, you have access to that to put food on the table. If you pass away, your family will inherit that to make sure the funeral is paid for. The house cannot be lost, especially if they have a mortgage or something. It's just that much more value. You don't have to lose the house if you pass away. So I want to open this up for questions because that might have been a lot, but again, I like to simplify it as much as possible. I go over that pretty much exactly with a client. If they've never heard about it, I took you guys from A to B of my A to pretty much Z of how I go over the illustration, how I walk through the policy, qualifying questions, structuring the policy, how I go over it with the client. And then from there, it's like, all right, man, awesome. So, it's going to be about maybe a 5 business day underwriting process. So unfortunately, I probably won't be able to tell you today if we get approved for it. But would it make sense to like take the next 5, 10 minutes here and at least put the request for coverage in to see if we can get you that approval, to see if we can take the next steps on this? Yeah, awesome. And then NLG is the GOAT. No one can convince me otherwise because all I have to do is write this illustration the way I did, put in their date of birth. Fuck. Okay. And then I go directly to the application, and that is why NLG is the GOAT. Gerson test, like directly into the application. Everything you put into the illustration is going to get transferred over. I guess it's gonna give me a little bit of a problem here. Let's see. Just have to relog in. All right, perfect. Already in the pipeline, ready to start the application. Everything's already transferred over. Like we're good. Don't have to get any illustrations signed. I don't have to I don't have to type everything in from the illustration into the application. If F&G could fix that, they might be able to win me over. Until they do, they'll never get that. Like they can't convince me that they're better. I'm sorry. I don't care about anything else. Like it's so simple. I could just run right into the application and it's just super easy. Also, their signature process is impeccable. Will this application be completed in person? No. A reason I'm video conferencing with them, and then I can sign it on my screen with their permission. I don't have to send them over an email to have them try to fill it out for the next 25 minutes and they can't figure it out. And then I'm like, oh, I guess we could finish it up tomorrow when you figure out the email. No, I mean, like, if someone can't figure that simple part of a signature process, like, it's just a pain in the butt, makes the whole experience for them, like, kind of shitty. So super, super easy. I love NLG for that. But again, I want to open up for questions. So Nicholas, also Carmela, I did see your hand up. But what's up, Nicholas?
Just real quick, so you said you go over the qualifying questions before you get into that illustration, right? Because there's no
I go for
point.
qualifying questions before I even talk numbers because I want to know if I can even talk about the IUL with them any further.
Okay, cool. Thanks.
Yeah, because like let's say they don't qualify for them, like I mentioned, pivot over to whole life. And if they're like, okay, well, those help me for like my retirement. No, but I do have a policy that can do that. Boom, flexible annuity. Let's say product illustration. I have to go back to homepage because it's going to be a different illustration page. All right, whatever. I'll show you that. I'll show you that another week. But flexible annuity, they could put something in monthly for as little as $100 a month with NLG. Flexible annuity, it'll grow with the market. 0% floor on the downside. Can't lose anything with them, and they're fucking awesome.
Awesome. Thank you.
Awesome, Carmela, what's up?
Could you repeat that line that you said when you were talking about that it's a conservative illustration and you said 6.5? I couldn't write it down for me.
Yeah, so it
But
is
that whole line
the
detail.
illustration with NLG is a 6.45% assumed interest rate. So I go over them that, hey, like this is a more conservative illustration because we've been able to average a bit higher numbers than this. Like I mentioned, closer to like the 10% net after cost of insurance. And it's always better to under promise and over deliver. So I'd rather show you something that is a bit more conservative that I can actually show you even like on if it doesn't perform so well. It's still an awesome policy.
Thank you.
But yeah, the under promise over deliver line is good for sure. What's up, Jackson?
Yeah, when you do that over deliver and under promise line, do you also mention how it has no downside? Obviously with the IUL. Do you like throw that? I know you probably throw it through like your presentation and everything like that before you get down to the numbers, but do you like reemphasize it all during that part?
Like you're saying, like how like there's a 0% floor.
Yeah.
Yeah, so like, I mean, I'm constantly throughout the call, I'm building value on like what it like how it grows, why it grows, how it's gonna help them specifically. So I mean that's you can throw that in there. I'm not gonna say like here throw it in at this exact time when you're explaining this, but like you went over at the beginning. I mean, you could definitely like remind them, okay, and like by the way, again, the entire time we assumed zero risk because we can't lose any of this accumulated value. Worst case scenario on any given year is the market doesn't perform, and all we have to do is have the cost of insurance come out. That's it.
And I just have a another real quick question. You said you get them on Google Meet for this. You started doing that recently, and like you seen like a difference, you would say?
Yeah, 100%. Because I don't get banged on banking. I don't get banged on social because they're watching me fill it out. How could they bang on me? It's like I'm showing you from age. You watch me log into my agent portal. You watch me do the illustration. You watch me go into the e-app. You're seeing it's a required question, social security number. I can't skip that. I can't send you something in the mail until this is completed.
No brainer. Thank you.
I mean, it just logic. Actually, shout out Luxembourg Leonard. That bald motherfucker. I love that guy. He put me onto that big time. He's a goat for that for sure. I did not take him up on that advice until like recently, but it's really honestly made a big difference and recommend everyone do the same.
Appreciate the game, brother.
100%. Cam, I saw your hand up first.
Uh, you earlier you touched on like the value sandwich or whatever, so like value and then your price and then your value again. How are you like? Because I've only done whole life and stuff like that. I've tried applying that, but what's kind of your like your verbiage as far as like you're probably going over like the death benefit, like those three big things, and then you're throwing like maybe the price in there. How are you structuring that specifically?
So very beginning, obviously I'm open up like what are your goals? Awesome. Those are your goals specifically. Here's how I'm going to help you, accomplish those goals. Here's how the policy works. Let's like then I try to find holes in what their current situation is. Do you have any permanent life insurance? Do you have a plan to replace your income if you got sick? Do you have anything building for yourself like retirement? And like while I'm going over those, I'm always searching for annuities. Like I just issued $110,000 annuity. I have a $275,000 annuity, like literally just waiting for her to get power of attorney over her husband so we could write the thing. Like I'm always looking for annuities because that's bigger money. So while you're going over those three components, Cam, like you're also going to be asking like, Bert, what do you have in place for life insurance? What do you have in place that's acting as retirement? What would pay out if you passed away? Do you have anything else building for you? Any 401ks, TSPs, IRAs, high yield savings accounts? Like, have any money laying around, underperforming assets, non-performing assets? I just note that down. And then I'm always coming back to that. But as I'm building the value during those three components, I'm exposing holes in their situation. I'm exposing their problems. I'm having them see it. I'm even having them verbalize it by telling me, no, I do not have a plan or a policy in place to protect my family if I lost my job. I'd be fucked. I want them to say that because then that's like I don't have to convince them of everything. They just told me that. So I'm having them see that value. I'll go over qualifying questions to determine if I can continue looking at the IUL or pivot something different. I go over if I have to pivot to something different, I'll build a little more value on that. Or I'll just go directly, okay, here's how we structure them. We're to put 5 to 10 times your age away on a monthly basis, price, figure out a number that I can agree upon. Because again, even if they can't afford something right now, but they want the benefits of the product, you don't always have to pivot directly to, like a simplified issue IUL. Because let's say someone like me comes across someone with a Mutual Omaha IULE, they're putting in $70 a month and they want tax-free retirement. And I say, okay, awesome. I'm just a policy service director. My job is to make sure it's structured correctly. Now, when you got that policy set up, was that more growth focus or protection focus? Like what I mean by that is we're looking to build your cash value or just maximize your permanent protection. Like, I want to build cash value. Oh, okay. I mean, I love Mutual Omaha, but I can tell you right now, I mean, that's just it's probably not set up correctly for those goals. Now, go ahead, do me a favor, write down my information, grab pen and paper, and like I will replace the fuck out of that policy because I don't like when people lie to clients. I like putting people over profits 100% of the time. So I can set them up with an IUL that they know they're getting a raise at work. They know they're going to be able to afford it in whatever 3 months, 6 months, a year. I can set them up with an IUL where they're planning on putting in the minimum guaranteed premium or a little bit more and put them in a position where when they're able to, they can now flip the switch and start funding that IUL at a higher level. I mean, it depends on their goals though, because if they're like, I'll never see myself putting in 200-300 bucks a month away, awesome. Mutual Omaha, IULE, America IUL all day. But like, if they're telling me their goal is tax-free retirement and they don't have something that could do that for them, I'm gonna help them get that. So I go over again, like their budget, the price that we can agree upon. We can put some money away into it, and then as I'm showing them the illustration, I'm building more value on here's the flexibility of the policy. Here's where it's going to be growing. Here's how much you need to put in. Here's how much you can put in. Here's how much we're planning on putting in. Here's the death benefit that's available to you day one. God forbid you passed away, it's paying out to your family, tax free. If you were to get sick, injured, if you were to anything like that, now you can access this amount of money. Like here, like I can show them in the report on NLG. It says like at age 65, projected to have X amount in critical illness. If I have a critical injury, a critical illness, chronic illness, here's how much money I can access. You can show them all that. Excuse me. But that's where I'm building the extra value. After I talk about price, I'm showing them the illustration to go over like exactly where they're going to be benefiting, how it's going to help them, and help them solve whatever problems they told me about.
Gotcha. Appreciate it.
100%, bro. And then Dan, I saw your hand up, bro. But I did want to answer Nicholas's question first.
Oh, thank you. No, Mr. White already answered my question. It was just why would a client want max cash value, minimum death benefit? So he answered it. Thank you.
All right, bet. And if anyone has like specific questions, if you're ever talking to a client and you're like, fuck, I don't know what to do here, you can always call me. Like I can be someone that can hop on a call with you and you can just be like, yeah, I'm gonna get my IUL specialist on the line with us real quick just to clarify a couple things and maybe whatever it might be. I'll throw my number in the chat here. I do have two phone numbers. Some of you might have my other phone number. AT&T is kind of fucking me right now, so I got to figure that out with my other line, but you can always contact this number, 305-934-9328. It's actually the same number as the Zoom meeting IDs. That's my phone number. So you can always contact me and get me on the line with someone if you need like some help with an IUL or annuity. I can always be that guy. But Nicholas, what is up, brother? What's your question?
Just real quick. So when you're going over the illustration, do you ever get anybody that's like, hey, can you send me that over? Because that's what I would get when I was doing IULs back in the day when I just did like a complete flip and I fell flat on my face because I would get a bunch of people that would say, I'd get down to the illustration and I'd kind of explain to them, and then they'd be like, "All right, perfect, send that over. I want to talk to my wife about it." And what my office says to do is like, hey, there's nothing to send you over right now because we haven't applied for everything, this and that. And I particularly don't. That's not true. I can send them an illustration. So I particularly don't like lying to my clients. Like you said, is there a different way that you handle that? Objection where I don't have to lie, and if not, it's fine. But I was just curious how if you get anybody that says that when you're showing them the illustration online.
I don't tell them that I can't send them anything over. What I tell them is like, okay, like I mentioned, it's still gonna be like a 5 business day, at least like underwriting process. So as much as I want like to make sure this is all good with you and the wife, you guys are gonna have some time to obviously review this information. I will send you over the email. I'll send you over the whole report. Like I'll share my screen again real quick. 1 second. So I'll as I'm looking at this illustration with them, let's say go back to this. Can everyone see my screen by the way? It's showing up or it's still loading? Okay, then
Yeah,
it just showed up. All right, so on this run reports, this is where you can see a whole breakdown of the policy. So like I could actually download this and send them over this whole, and like product illustration, all that benefits. National Life Group has shit ton of money in total assets. Like there's some dogs, but whatever. The point is, I could send them this. I could definitely send them that, and I'll tell them, okay, awesome. I'm gonna download this and send it to you. That way you can review it with your wife and have any questions. You can ask me about them. But I mean, if this is something that you even at all think about, you want to get started, what I'm going to do for you is at least run through the request for coverage application to get the ball rolling. That way, again, we have some more information to know because if they have any further questions or requirements, they're going to come back to us about it. Because if we don't get approved for this one with National Life Group, I do have other companies I work with. I'm blessed to be a broker, so I work with all the A-rated companies in the entire nation. So I'm able to look at some other options for you, but this is going to be our best option. So I want to make sure that we can work with the best if we can. So I want to get that ball rolling for you. And then what we could do is you can schedule a call with me maybe tomorrow or the next day, and we can review the entire illustration. Because what we're going to do, Nicholas, is if we do get approved for this, we're going to go over a final presentation together. We're going to go over a final call and review this policy line by line. That way you know every little thing about it and just to make sure it's going to still be the best fit for you. Right now, we're not actually making that decision at the moment because unfortunately we can't. Like I can't tell you, yep, we're going to get approved. Awesome. When do you want the money coming out? We're going to get it started. I wish I could. I wish it was that easy, but I don't get necessarily. I get maybe 10% of the time instant approvals, right? And then even with those instant approvals, it takes a couple days to issue, and then I have that amount of time to go over with the client. I tell them just like this, like before we roll into it. Awesome. So, Nicholas, if we do get an instant approval today, it happens maybe 10 to 15% of the time, so it's unlikely. But if you have a crystal clear medical background, no driving background, no criminal background, there is a chance. So what we'll do is if we do get that instant approval, 24 hours from now, what we're going to do is we're going to hop back on the phone here on the same Google Meet, and you can have your wife on that call. We'll go over the policy line by line and make sure this is something you still want to go through with after we go over all of the details. If it goes to underwriting, again, I'm going to keep you updated through the underwriting process. And as soon as I hear back from them about an approval or decision, we'll have that exact same phone call if we get approved and go over line by line of this policy. Like that's something I always do with all my clients. So that's not going to be anything different with you. So I want you to talk to the wife about it. I even want to help explain it. That way your wife is on board, but I still want to get the ball rolling for you. That way, again, those concerns you mentioned to me, we can at least get started on seeing if what we could do, what our options are. So I'll email you over all the information you need. I'll send them to you. We'll have a follow-up call and review the policy line by line, but we're going to get the ball rolling because it's not as simple as, just saying, hey, you want it, and I can't just give it to you. We have to get the approval from the insurance company.
Thank you.
I like the lines like whenever anyone tells me that they need to think about it, it's like perfect. Well, like the insurance company needs to think about you as well. Like they actually need to think about whether they're going to insure you or not. So like we still have to fill out this application and see what we can do.
Thanks, I appreciate it.
What's up, Carmelo?
Sorry. Do you have your own script? Like your own self-made script that we can use?
I don't I do have a script. I'm not gonna say it's perfect. I haven't really revised it in a long time, but I can send it over to individuals if they want it. It has a lot of good information. It's not like exactly everything I went over today necessarily, but it does have some good information in there. If anyone has any like questions about running through it, I do need to fix it up. I need to make it a little bit more coherent. That's the reason I'm a little hesitant. It's like I don't want to confuse anybody. But yeah, I mean, if you want to put your emails in here, I can send some shit over.
Thank you.
All right, any other questions? I know we've kind of ran a little bit longer today, but I thought that was a good call. Oh, there should be still have 45 people on here. That's like a record track record fucking persistency. I don't think we've ever had same amount of people at the end and the beginning. That's crazy. All right, what's up, Ed?
Hey, it's going. Quick question for you. So I'm 6 weeks into the business. I came over from that other captive company that nobody talks about. But the issue is that I got F&G by accident. I requested it and they didn't realize I wasn't supposed to have it yet. Apparently they don't want us writing. So I don't even have NLG right
Wait,
now.
who?
My upline.
Wait, they don't want you having FNG or NLG?
Either one.
Why?
I don't know. I was told that I need to be more. Anyway, neither here nor there. I'm not complaining about that. I'm just curious. Like, I also watched a video on the fact that this one guy will hardly ever write NLG unless he absolutely has to. He's like, F&G is the way to go because it's a lot simpler.
FNG is good. For me, NLG has a client app. They could review everything in the app. They can make extra payments. They could change their bank in the app. They can see their policy values. They have the e-app submission straight from the illustration. I don't have to get anything signed. The signature process is much simpler. Like for me, that level of convenience for the client and myself getting the policy started is it's much more worth it. The only difference between F&G and NLG, honestly, is first of all, NLG has better living benefits. So F&G does not have critical injury benefits or Alzheimer's or like the fertility journey rider, which is a whole separate thing. But I don't think they also have the minimum guaranteed premium where it ensures it won't lapse for a certain amount of time. Only thing that F&G might have NLG beat on is their the BlackRock and the Morgan Stanley index crediting strategies, which illustrate higher. That's why in the illustrations they're going to illustrate higher. But like it's not a crazy difference that would, put someone in the hole. Like honestly, they're gonna have more financial security with NLG on like a health level, like with better living benefits. But they're awesome policies. There's not too much of a difference to like really dog on either one. I just like NLG's convenience level, but there's nothing really wrong with F&G. They're an awesome company with amazing index crediting strategies.
So the other question I had would be, where would you flip from Americo's IUL to F&G? Like, what's the purpose of doing F&G over the Americo?
The reason I would go with like NLG or F&G, like a structured IUL opposed to like America or Mutual, that would come down to like their actual goals and their pricing. If they're telling me their goal is to like maximize protection, I'll probably just go with something like Simple, Mutual, or Americo just to give them an instant decision right there and get them a lot of coverage for a good rate. If they're telling me their goal is cash value, then I'm going to be more leaning towards F&G or NLG. I mean, Ethos is also good. I just don't like writing Ethos because of the whatever is going on with them, but they're all good companies. It's just going to be different purposes. If someone's looking for protection focus, NLG and F&G can actually give them more coverage, but I don't think it's worth it to go through the underwriting process if they're only looking to put in like 40, 50, 70, $100 a month protection focus. If they're looking for more than a certain amount of coverage, I'd probably go F&G and NLG even for protection focus. Like if they're looking for over $500,000 I'd probably just go with NLG or FNG. But besides that, I would stick with America or Mutual for protection focus. So like focusing on the death benefits, the living benefits.
Okay, awesome. Thank you.
When I first started, I was told it's like anything over 300 do NLG, anything less than 300 don't write NLG. It's like it doesn't make sense to me because as long as they can put in 5 to 10 times their age, I don't care how much they're putting in. If they're putting in that amount, I'm gonna get them the best policy. What's up, Jim?
Hey, so with the living benefits, right? I have a very specific client who asked about that. Do those living benefits apply for child policies also? If he's using
Yes.
this for, because this seems like the perfect product for him for college planning, and it
Yeah, they're
covers.
awesome for kids. They're fantastic for kids because who has sold Mutual of Omaha Children's Whole Life before? Awesome policies. They convert into adult policies. While they're young, though, there's no living benefits. So if
Right.
that kid gets sick, they have no access to that money. It's like it only pays out if the kid dies. It will have living benefits in the future, but even Mutual of Omaha's whole life policies only have terminal illness riders. So they have to be declared terminal for those to pay out living benefits. So I like NLG or FNG children IULs because of the fact that they have living benefits from day one. It grows them significant cash value. The kid can take it over, pay it when he's 18, 19, 20, 21, whatever. But yeah, they're awesome for kids. Fantastic.
All right, perfect. Thank you.
Louis Smith.
You were saying that the living benefits are like 30 to 90%. I was just wondering like what determines like where it falls in between there.
So like if someone gets into like a car wreck and they're in a coma for, 3 months, they're probably gonna get a little bit more access to money opposed to like someone having a stroke and being in the hospital for a couple of days. But they'll both get access to money. So it's just the severity of the injury or illness that's going to determine it. I don't have like a guide that'll show you that,
Yeah.
but just depending on the severity of their illness or injury is going to depend on like how much money they might be allotted to. Anything with a terminal illness, they always have access to a lot more critical injury, critical illness, chronic illness. There is definitions of those as well. Anything chronic illness is defined by them losing 2 out of 6 daily living activities, like them needing, like them being dependent on them for, like, let's say, eating, sleeping, changing, using the bathroom, like just getting around. So if they're dependent on others for 2 of their daily 6 living activities, then that's going to be qualified as a chronic illness. So they'll have access to X amount.
Okay, cool.
What's up, Cam?
So super quick, you said with you mentioned ethos or whatever, like what's going on with them or whatever. I
There's
don't
nothing
have
really going on
FNG
with
or
them.
NLG.
I haven't had a great experience with like their clients, like I guess reporting like them showing policies that are paying chargebacks. I stay away from Ethos for those reasons, but I mean they're not a bad company. We use them for a reason because they're good. I just stay away from them.
Gotcha. Okay. So because I don't have FNG or NLG at all. So like I haven't read an IUL yet, but it wouldn't be bad to still, even if I didn't have either two of those, I could still write through Ethos, even though I guess the
You
report to you as
definitely
well.
could. You definitely could. I would
Okay,
still like text your admin today and request NLG and
for
FNG for
sure.
you, like immediately.
Gotcha. Okay.
I would like, here's the thing, if you have the option to write Ethos IOL opposed to like NLG, I would just do NLG. If I
Gotcha. No
had to
matter
pick, yeah.
like protection, no matter like what they want to pay for the month, like no matter
To
what.
be honest, yeah, like I've never wrote an Ethos IOL and I probably never will.
Gotcha.
I'll leave it at that.
Okay.
What's up,
Appreciate it.
Danielle?
I have a quick question. I'm like newer here, so I just got NLG approved. So I've
Nice.
been writing mostly just simplified IULs on Americal or Mutual. So I was just wondering, you might have already went over it, but how hard is like the underwriting process for NLG? Like what's like an absolute no? Like if they have like diabetes or like controlled or like high blood pressure, like is that going to be a no through NLG for the IUL?
So
Or
high blood pressure is not a no. It just depends on like the severity of it. and maybe like the medications they're taking to control it. Diabetes, anything with insulin is going to be an automatic decline for any IUL. But if they have diabetes, it's controlled. They're just taking like maybe one medication. They can probably get approved at like a lower rate class. So NLG has standard non-tobacco, select, preferred, and elite, and then less than standard would be express standard non-tobacco 1, express standard non-tobacco 2, preferred tobacco, standard tobacco, express standard tobacco. So like they'll probably get a little bit less than standard. But they can still get approved for it. Like it's not actually so crazy on the underwriting process, but it is definitely more strict than Americo Mutual because they're gonna have a human actually look at the individual's medical history and all that. So less things will slip through the cracks. Like with Mutual or Americo, you can get away with someone, maybe have like not Mutual for Americo. Even if they have a suspended driver's license, you could just put they have one and it'll slip through the cracks like 10 out of 10 times. But NLG that'll never happen. Even with Mutual, they have a second underwriting process. Like it might get approved, and then it'll also say like fully issued and approved. You get an email for that. But that like for the driver's license, that won't slip through the cracks on Mutual. For America, it will. But yeah, NLG is a bit more strict. I would definitely make sure if you're gonna write them, you should definitely make sure like the client is more than likely gonna get approved. I wouldn't mess around like with NLG's not persistency, it's I forget what it's called. It's not the premium applied ratio, but like they'll track all the applications you write and then how many of them actually get issued and how many of them get paid. I just wouldn't want to be on NLG's bad side because I want to have that carrier for the rest of my life.
Okay, gotcha. Thanks.
100%. And then Brennan, right? Brennan Reed at gmail.com.
Yeah, thank you. So my main question was, could you just like clarify the three main selling points? Because you had like the early access, like the 30 to 90%, and then the market growth rate. And then what was the last one that you mainly touch on?
I go over death benefit, living benefit, cash value. Those three things. Just dumb it down for the client. Death benefit is permanent life insurance that'll pay out to your family one day. We all have a due date, so this will pay out to them one day. Do you have permanent life insurance? No, well, this is going to be your permanent life insurance. Congratulations. Living benefits. I give you access to immediate money if you get sick or injured and can't work anymore. Do you have something that can do that for you right now? No, perfect. That's what's going to be. Congratulations. We're going to get that set up for you. You have anything building for yourself long term for retirement? Yes. Okay. Well, this is going to be something else building for you, but it's going to be tax free and it's going to be liquid. That's the cash value. So like you could dumb it down really easily, but just hit on those three things and let them know your money's going to be going into two different areas. Cost of life insurance and a cash value account. Depending on what their goal is, we could fund either account more aggressively.
Awesome. Thank you so much.
100%. All right, y'all. Hey, I really appreciate you guys. God bless you. I appreciate y'all for sticking, an extra like 20 minutes. Hope you have an amazing week. Let's sell some fat policies.
Where do we get the trainings? Like the recordings?
Text Connor White.
I bet.
All right, peace out, y'all.